The general financial services industry will continue to implode. In this episode, I'm going to share with you how to outperform 99% plus of financial advisors and become a hero to your clients. So I'm Doug Andrew, and I've been involved in the financial services industry now for north of 48 years as a financial strategist and retirement planning specialist, helping my own clients optimize their assets, minimize taxes, and empower what I call their authentic wealth. So I've actually trained over 3,000 financial planners, CPAs, tax attorneys, and I wrote a book called 10 Keys Transformation, how you can take your financial services practice and grow it by 10 times in 60 months or less while simplifying your life. I'll show you how you can get a free copy of that book at the end of this episode. So throughout this episode, put your seatbelt on, especially if you're a financial advisor. I'm going to talk about creative destruction, how the 4% rule came about and why it's totally unacceptable to me, why advisors are told to say to their clients, oh, the market always comes back when there's a market crash, how to not deal with just a commodity. It's actually in the strategy, not in the commodity. And I'm going to show you how to use a strategy that will empower your clients so that you will be in the top 1% or higher of financial advisors out in the financial services industry. So let's go to Joseph Schumpeter. He actually talked about a concept years ago called creative destruction. I'm going to simplify this. He said that in different types of industries, what usually happens is entrepreneurs, business owners go out and they begin to succeed helping their clients with all kinds of dynamic strategies. And so we're going to talk about how this happened in the financial services industry through the years. And he says what happens is more and more, there are regulators and government entities, maybe well-intending, that come in and they go, we've got to control this, because sometimes there's a few bad apples that spoil it for the whole bunch because they're dishonest or whatever. They're not looking out for their client's best interest. They're not being true fiduciaries or whatever. And so what happens is they overstep their bounds and they start creating all kinds of regulations. And, you can't say this. You have to disclose this. You can't say that. And through the course of my 48 years as a financial strategist, I have seen this happen in real life. I remember talking about accumulating money as an alternative to traditional IRAs or 401ks, and I would call it an IRA or 401k alternative. And then they said, you can't say that after a few years. And so they said, you can say non-qualified alternative. See, it's a non-qualified plan. And then they said, pretty soon, you can't say that. A non-qualified alternative to IRAs or 401ks. And then they changed that. And then you had to say non-qualified alternative to IRAs or 401ks that is not deemed a qualified plan. It's like, what? And pretty soon it got so complicated. The disclaimers were this long. And then you had to go through compliance for weeks, and by then it was history. And so a long time ago, I realized, because I started a radio show, if I submitted my radio show to compliance, by the time it got back from all the attorneys, it would be history. So I just let all my licenses go to be able to teach the general public in the terms they can understand it without having a straitjacket on. And this is what Joseph Schumpeter called creative destruction. Pretty soon, there are so many regulations and things you can or cannot say that pretty soon the poor public are the ones who suffer. They're going, what are they saying? And so they miss out on opportunities. This causes the industry to implode, and I've been watching this evolution take place now for nearly 5 decades in the financial services industry. So clear back in 2005, I said, I'm done. I let my licenses automatically expire the last business day of 2005. I began to write books, do radio shows. Now I have this YouTube channel, which, by the way, I would recommend you subscribe to this channel. I have over 730 educational videos as of the recording of this episode. It's free. and post comments, but my passion is to empower you, educate you, and most people who watch these episodes, they want something they didn't know they wanted until they got educated, but I just shoot straight because I'm an author. Do you know what the word author means? It means you're an authority on a subject. Yeah, I've been doing this a long time, helping people optimize assets and save their money the best ways and eliminate the dangers of taxes, inflation, and market volatility through my favorite instrument, which I call the laser fund. So going back to this, Joseph Schumpeter said, escape from that so you're not part of this creative destruction, which I did, and I'm grateful that I took that advice. Now, the financial services industry, the vast majority of financial planners follows the herd, and they put your money into IRAs and 401ks, telling you, oh, you'll likely be in a lower tax bracket when you retire, and put your money in the market, because if the market crashes, the market always comes back. We hear this all the time. Oh, the market goes down 25, 30, 35%. What do most Americans do? When it drops 30, 35%, most Americans panic and they go, enough already, and they sell. They sell low. Who's buying your stocks? Institutional investors that are waiting around to buy low. See, smart people buy low, they sell high. Most people, they sell low and then they wait till the market rebounds and they buy high. And that's why Dalbar, who studies investor behavior, says if you bought and held, you would probably earn an average of 9.14% with your money in the market over a 20-year period. And so, if you're earning 9% and you accumulate $1 million, theoretically, you ought to be able to withdraw 9% of $1 million or $90,000 a year. If it's in IRAs and 401ks, you pull out $90,000, you're going to pay tax between federal and state tax of about a third, $30,000. You're only going to net $60,000 or 6% if you buy and hold. Most people don't do that. They panic. They buy and sell at the wrong time. So do you know what the average rate of return is actually for investors in the market, especially retirees? 3.49%. We'll say 3.5%. This is what precipitated the 4% rule in the financial services industry. See, these broker-dealers do not want to be sued if you outlive your money. So they say, we will not allow you to pull out any more than 4%. If you pull out 4%, you're going to gradually deplete your nest egg if it's averaging 3.5%, but it will last to your LE most likely. What's LE? Life expectancy. That's the 4% rule. The problem is, you have $1 million nest egg and they only want you to take out $40,000 a year. You have to pay tax on that. Even in a 25% tax bracket, you're only netting $30,000 or 3%. Most asset managers charge you 1% asset management fees on the million. So if you deduct that $10,000 out of your rate of return, you're pulling out 4, you're earning 4, and you're only netting 2. Do you accumulate $1 million to net 2%? That is pathetic. What if that million generated 80,000 or 100,000 a year of income tax-free? How much more is 80,000 than 20,000? It's 4 times, it's 400%. How much is 100,000? It's 5 times or 500% more. This is dynamic. That's why my favorite vehicle called the Laser Fund will historically generate 8 to 10% payouts without depleting principal tax-free. It knocks the socks off of money in IRAs and 401ks in the market because your money's not in the market. You link your returns to what's going on in the market. When it goes up, you participate. When it goes down, you don't lose. But it's totally tax-free. You're immune from market volatility and taxes. You also link your returns to the things that inflate, so inflation actually helps you instead of hinders you. You can learn more about all of this in the book I'm going to gift you here in just a moment at the end of this episode. But if this is making sense, this is why in the financial services industry, so many advisors are taught to just sell and then churn your money, buy and sell, because this is where they make their commissions. This is where they get caught into this, oh, I'm doing the best thing for you, and everybody follows the herd, putting money in IRAs and 401ks in the market. That is not where you should have your money when you retire. Wall Street was not designed to create predictable income during retirement. So, it's not in a commodity. It is not in stocks, bonds, mutual funds, gold, silver. It's in the strategy. You will learn that the strategy of indexing, and I'm not talking about index mutual funds, that's a commodity. Indexing is a strategy where you make money when the economy is doing well, but you do not lose when the economy goes down or crashes. That is a strategy that protects you so you don't lose. It was Warren Buffett that says there's 2 rules of investing. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. You can accomplish that by using max-funded indexed universal life insurance contracts if it's structured correctly and funded properly. This is where I've averaged 9.62% ever since 1997. That means every million can generate $96,000 a year. That's $8,000 a month of tax-free income. But if inflation goes to 10, I earn 15. If it goes to 15, actually in the year 2021, I earned 61.33% on indexed universal life. If you don't believe it, search this channel for episodes that show you the actual statements of people who locked in gains of 25%, 61%, even 153% on max-funded IUL. So I'm going to give you 3 resources that you can go to. If this has intrigued you and you want to learn more about max-funded IUL, and you want to see proof that those have earned rates of return averaging 9.6%, some years 15%, 16, 25, 61%, 153%. Search this channel, but you can read the book called Laser Fund. It's 300 pages. You go to laserfund.com and you contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that, and I'll pay for the book and send out a copy to you. Now, if you are a financial professional, you can learn about 10 keys that will help you grow your practice by 10 times by claiming your free copy of my book, The 10 Keys Transformation. And you do that by going to free10keysbook.com, okay? free10keysbook.com. Same thing. You'll be able to download the digital version for free. And, you contribute a nominal amount towards the processing. You print it out, but there's options there to listen and learn and watch and learn. There's an 18-hour masterclass on that one. Now, here's where I want you to go. If you're already familiar with indexed universal life, but you want to take your practice to 10 times, I would recommend you check out IUL Insiders. This is a mastermind group that I facilitate, where we help you take your IUL practice through the roof. We've helped many insurance agents not only double, but 10 times their productivity in less than 60 months. How do you find out about this? Go to IULinsiderpro.com. Click on the link, IULinsiderpro.com. Register. We teach an educational 90-minute webinar almost on a monthly basis. That will help you understand it, and then you can decide if you want to join this mastermind group and take your practice to the next level. This is all about you. This isn't about me, about your brighter future. So thank you for watching. Subscribe to the channel, and I will see you on the brighter side of your amazing future.